Hello, my name is Luke Mayfield, and this is my midterm presentation on cost analysis and budgeting. So let's quickly run through the agenda of what this presentation will include. We're going to quickly go over the two-company analysis, going over the job order costing company that I chose, and then the process costing company that I chose, and then we'll look through some of the costs of starting like a theoretical personal business, and then we're going to talk about the importance of budgeting, and finally the similarities of personal and business budgeting. So to start off with the two-company analysis, for the job order costing company, I chose CBiz. If you don't know what CBiz is an accounting firm. They're one of the only publicly traded accounting firms, which is why I chose them because I have access to look at their financials and kind of look over their costs. But they exhibit job order costing by personalizing and tailoring the services they offer to each client. And then for the purposes of this presentation, we're mostly just going to focus on the audit department. We kind of look at it in a broad sense, but we'll focus specifically on audit. And then for the process costing company, I chose the Hershey Company. I'm sure we all know what the Hershey Company is, but they demonstrate process costing by mass producing chocolates, candies, and snacks. For this presentation, we're going to focus mostly on their chocolate factories and the chocolate side of their production. So let's get into it. We'll start with CBiz as their job order costing. CBiz has no direct materials. They are completely a service company. They don't have any inventory account on their the 10K from 2024, nor do they have a cost of goods sold on the Form 10K. But a majority of their costs for their business comes from direct labor. So that's what we see a lot of their costs coming from. And if you look on Indeed, a salary summary kind of gives you an idea of what each laborer costs. So an audit associate is paid about $67,000 a year, or about $35 an hour. For an audit senior, it's $86,000 a year, or $45 an hour. And for an audit manager, it's $116,000 per year, or $60.50 an hour. So usually they bill their services by the hour. So if you have an audit senior working with you, they'd be billed $45 an hour, plus usually they add a flat fee to cover their overhead, but we'll get into that later. And then just an important note is that they, in the first quarter of 2026, they had personnel fees that cost them $472.46 million. So that was a big portion of their revenue. So let's get into the manufacturing overhead for CBiz. They reported $23.75 million in depreciation and amortization. So if we assume that the depreciation was on assets that they used to provide their services, that's a huge portion of their manufacturing overhead. They also reported $58.6 million in current lease liabilities and $395.36 million in non-current lease liabilities. So you can see that those obligations to pay rent, overhead are a pretty big portion of their balance sheet. And then they listed $31.69 million in facility costs. So those were expenses that they paid this year that they acknowledged. And then for selling general and administrative costs, they list certain technology, certain facility costs, healthcare costs, stock compensation. So what I mean by certain technology and certain facility costs, obviously they're period uses instead of product uses. So we're talking about technology for payroll or for management, so things that don't directly go into the services that they provide. But this SG&A expenses totaled $29.57 million, or 3.5% of revenue in Q1 of 2026 again. And many offices, it's important to note that many offices in CBiz incur both manufacturing overhead and selling general and administrative. They don't necessarily have a building for their service providers and then a building for the managers. There's usually a bit of mix in both in one building, so it's up to their accountants at CBiz to kind of differentiate what is a MOH cost and what is an SG&A cost. So now let's get into the direct materials and the direct labor of the Hershey Company. So obviously the Hershey Company does have direct materials because they do sell a physical good, but their materials mostly include cocoa butter, cacao beans, milk ingredients, peanuts, sugar, and vegetable oil, obvious ingredients of chocolate. And then they also include packaging materials. These are an important thing to consider. They have to provide the chocolate in some sort of packaging, right? And their inventory balance was $1.43 billion in Q1 2026. And then direct labor, a majority is kind of the opposite of CBIZ. A majority of their work is done by machinery, but labor is still needed. You need people to assist in operating the machines. You need people to manage the operating floors, and then obviously you need maintenance for the machines. So those are three examples of how labor is still needed within a Hershey company. And then again, the Indeed salary summary provides us a good idea of how much these laborers cost. A production worker is usually a wage-based worker, an hourly worker, so they get $19.5 an hour, or assuming a 40-hour work week for 48 weeks, it's about $37,000 a year. And then a line lead is usually a salaried employee. They get about $94,000 a year, or about $49 an hour. So now looking. All right, and then for Hershey, we'll talk about their manufacturing overhead. So they have an operating lease expense of $16.38 million in Q1 of 2026, and that is just a small portion of the total buildings and equipment and assets that they own, because we can see that they have $199 million worth of land, $2.1 billion worth of buildings, $4.5 billion of equipment, and $334 million in construction in progress assets. So they own a lot of buildings, a lot of equipment, and obviously that makes sense because they need a lot of that to mass produce chocolate products for the whole country or the whole world or whatever. And then we can see that they have two major categories for selling, general and administrative. They have selling, marketing, and administration expenses, and then business realignment expenses. So the SM&A encompasses advertising, transportation, stock compensation, and consulting fees. So that's usually more of the administrative or advertising is what that category mostly focuses on, as well as obviously the transporting of items. But then SM&A totaled $576 million and business realignment totaled $5.9 million. So their business realignment is mostly for the sections of their business where they're doing certain programs, like I believe they have a AAA program that they're doing now to kind of realign and optimize their business strategy. All right, and so one of the resources that I used for this, for the research specifically on Hershey, was the nonprofit news outlet Marketplace. And so they did their own personal analysis on an estimate of what the actual price would be to produce each chocolate bar. And obviously, it's not perfect because they don't have all the details. But using market costs for like cacao beans and stuff like that, they kind of did their own estimate. So we can see where the direct materials are. So that's our packaging with at 4 cents and our ingredients at 12 to 20 cents. And then obviously labor is 1 cent, and then we can see our overhead is about 1 cent, and then 2 cents for the waste. Those are both fall under overhead, and then transportation would be a selling cost, and that's about another cent, for a total of 21 to 29 cents per chocolate bar. All right, so now we're getting into my own personal idea of how I would run a business and what the expenses would be for that type of business. So let's run through real quick what my plan is. I would create a small team of dedicated musicians and craftsmen to design and build handmade guitars. The target market would be all levels of musicians who are looking for quality custom-built guitars. We would appeal to those in middle to high income ranges who would be willing to purchase a slightly more expensive guitar. Each guitar is customizable and crafted with quality materials through hours of meticulous design, making them highly desirable. The guitars are designed to emphasize precise sound and playability while also fitting the look of any guitarist style. Additionally, many artists value having unique handmade tools, and guitars are no exception to that. So, real quick, just an overview of the actual costs. If we look at materials, there's a lot of materials that go into constructing a guitar, obviously. So we have items like pickups, truss rod, electronics. those are all key parts of a guitar. So we went mostly with the bare bones minimum for those materials there. Obviously, if customers wanted to add specific pieces on, like there's pick guards and other things that they could add, those would change the price, but that's more of a specific. So we kind of did an average cost, which would be the $410 total for all of those materials we have there. And then estimating labor, usually it takes most professionals about 15 to 25 hours to really build a guitar, get it ready to play. And then if we assume a general kind of $25 per hour for this labor, we're getting around 375 for the 15 hours or 625 for the 25 hours, which if we average that out, it's about $500 per guitar, right? So we did that. That's our labor cost, about $500 per guitar. And then our fixed costs, obviously, we have things like rent, utilities, insurance. Those are all necessary for owning the actual property. But then I also looked through some AZ business permits, and obviously there's permits that'll cost you more. Like if you're doing construction, there's permits that'll cost you less. So I did kind of an average, about $100 there. And then marketing would be one of our bigger expenses because obviously we need people to purchase our guitars. And then equipment, that's a one-time fee. So that would just be to purchase like sanders, hammers, everything we would need to actually get started on building the guitars. And then if we assume that that equipment lasts for about 5 years, we get depreciation about $120 a year. So our total fixed cost would be $20,220, and that excludes the equipment cost because that's a one-time cost. So I'm not going to count it in the fixed cost that we would pay every year. And then assuming we produce 250 guitars, which is assuming about a team of 5 people and an average of 50 guitars each per year, that would cost us total materials of $102,500, and then $125,000 for labor, which is the average of that 500 number. So let's understand our selling price and where our break-even point is. If we take $410 in materials plus $500 in labor plus $80 in fixed costs per guitar, we get about $990 per guitar. So if we assume that we want about a 25% gross margin, which is fairly low for artisan handcrafted guitars, but our goal is still to keep the guitars affordable, so we're not looking for massive margins. Our selling price would be about $1,320. So to calculate our break even, we take our fixed cost divided by our contribution margin. Our fixed cost is $20,220, obviously, and then our contribution margin is that $410 there, which is the $1,320 selling price minus the material cost minus the labor cost, because those are our variable costs. And then that would equal 50 units. So we would have to make 50 guitars or about $66,000 in sales in order to meet our break-even point, which when you look at our target profit, or our target production level, which is 250 guitars, we are well above that range in reaching our break-even point. So if we do all of the 250 units, we figure out what profit we would get on that. We would get about $82,280 in gross profit, which is a good takeaway, and that leaves enough room for income taxes and all that. And then now we're going to go through the importance of budgeting. We're going to kind of look at an example that I crafted here. So we're going to talk about John's Cafe. So John owns a coffee shop. He lives in a small metropolitan area, kind of on the outskirts, but he owns a small coffee shop, and he's a new business owner, but things have been going well. He started last April, and things have been going pretty well. So he's working on a budget for January now, and he's got a gut feeling that sales would be high. His thinking is that a lot of people are going to be home from the holidays, they're going to be going back to work, and they're going to want a nice coffee before they go to work, right? He does sit-in cafe, but he also does a lot of to-go. So he thinks that a lot of people will come in and get a coffee to go. He has little data to back his assumptions. Obviously, he's a new business owner. He doesn't have years upon years of running this cafe to kind of know what he's doing. And he hasn't been that great about tracking his revenue and expenses in the prior years. So he kind of just has a feeling of where things will be. And he also fails to check industry data. He doesn't look at other cafes in the area to see kind of what they're doing. He really just kind of goes off of his gut feeling. So he orders more than his usual shipment of coffee grounds, creamer, and croissants. Croissants are his most popular pastry, so he thinks that that will be a big seller. And then when January comes around, hardly any customers come in. his shop is a ghost town. So he's able to cover his overhead because he still has a fair bit of savings from the prior months, but he suffered pretty big losses in inventory because that milk-based creamer and the croissants aren't going to stay very fresh for a while. And so some of the key mistakes he made were his budget was not based on prior data nor industry statistics. That's a very important thing. You want to base your budgeting on statistics and on facts that you have. He didn't look at economic trends in his area. If he did, he would have seen that most people don't spend as much after the holidays because obviously they spent a lot during the holidays. He overpredicted his sales and ordered excess inventory. That's one thing you want to be very careful about in budgeting. And he didn't properly track his revenue or expenses in the prior months. So now we're going to look at some similarities between personal and business budgeting. For both, budgeting allows optimal use and allocation of resources. What optimal means obviously differs from person to person or business to business, but when you budget and you have an idea of what money is going to be coming in, what am I going to make this month, and what do I have to spend, what's my rent, what's my utilities, what are groceries, then it gives me, if I'm budgeting, it gives me an idea of, okay, how much money do I have left over to go do some fun stuff to enjoy the money I make, because after all, that's the purpose of it, right? Or how much money do I have to save and invest for my future? And it's the same for businesses. They understand what expenses are they going to have to pay, what do they think they'll make, and can they maybe try a new advertising campaign or put a little money back into purchasing some better equipment. And then number two, budgeting supports goal setting. So this is a very important thing for both people, individuals, and businesses to set goals, try and track your growth, try and have something you're shooting for. And so for people, budgeting can support setting a standard goal. If you know what your income and your expenses are, and you know what the margin is between them, say you make $500 more a month than you have to spend, then you can be like, okay, well, I want to save 250 of that each month, and then after so and so months I'll have this much saved up. It's the same for businesses. They can do budgeting to track their growth. How much are they making more revenue each month? Are they lowering their expenses each month? Are they reinvesting into the business consistently? Those types of things to allow them to set some positive goals. And here are my references for the slide.